Hey, welcome back to the channel. I am Jeremy. I am the Stock Brother, and you are on the Stock Brother channel. So, thank you very much for coming in today. What we're going to get into today, we're going to talk about exchange traded funds, or ETFs. That's what we're going to get into. A lot of people want to know, well, what's the difference and why would I go with an ETF instead of picking a regular stock or picking a single stock or individual stock? Why would I go and pick an ETF? So I've been getting some of those questions, so we're going to answer some of those questions today. We're going to get into basically what an ETF is. We're going to get into some different aspects of the ETFs, what they cover, what stocks do they have in their portfolio. We're going to talk a little bit about all of it today. I'm also going to give you some examples of some ETFs that you might want to look into yourself. We're going to get into that closer to the end of the video. So you all be sure and stay tuned and watch to the end of the video. We got a lot of great information that's going to come in this video, and I'm going to give it to you pretty fast. So you all, let's get into this. So what exactly is an ETF? So an ETF is basically going to be a basket or a bundle of securities that is basically put together to provide you exposure to different parts of the market or to different sectors of different areas of the market. So it's basically a basket of stocks that they put together. For example, an ETF, just to kind of break it down a little bit better, ETF is like a basket. So you have your basket here, and you might want to go and you put a little bit of Apple in your basket, or you put a little bit of Amazon in your basket, or you put a little bit of whatever stocks you decide to buy, you put that in your basket, right? And the same way, if you already have a portfolio started, the same way the stocks in your portfolio, if you see the way your portfolio goes up and down in value, basically every stock that's in that basket is like a stock that's in your own personal portfolio. So if the stocks that are in that particular basket or in that ETF, if they go up, the price of the ETF or the stock price of the ETF goes up. If the stocks that they track in that ETF or in that basket, if some of the stock prices of those stocks go down, then the price or the stock price of the ETF goes down as well. So they basically track the market or track different securities that they have in this particular basket. The best thing about an ETF is that they can track, or they can put whatever securities or whatever stocks they choose to track. They can put those particular stocks in the basket or in the ETF to be tracked. So that being said, when you have an ETF and maybe it tracks solar power, or all different companies in the S&P 500 or in the stock market that deal with solar power. You have other ETFs that track defense companies. You have ETFs that track just about every sector that you can think about. When you talk about commodities, or when you talk about there are all different types of every sector that you can think about. There's probably 1, 2, 3, if not more, ETFs that track that particular sector or to track those companies. So an ETF basically gives you the privilege of going and buying all of these companies in one basket and being able to track all of these companies in one basket or one ETF, instead of having to go buy each individual stock that they actually cover or that they track. And so because of that, you really have to be careful with the particular ETFs that you choose. You have to make sure that they have the companies that you want to own in that basket or in that ETF. Make sure they're tracking the right companies that you want. And you also have to make sure that this ETF is managed the way that you want it to be managed. Some ETFs are passively managed, meaning they don't really touch the stocks that they buy a whole lot. Once they buy them, they kind of buy them and let them ride. And then you have other ETFs that are actively managed, and they might go in there every quarter or every 6 months or whenever and change the stocks out and switch the stocks up. So you have passively managed ETFs and you have actively managed ETFs. So you just have to kind of watch that when you're talking about the ETFs that you choose to invest in. So one other thing that you do have to pay attention to when you're dealing with an ETF, or when you're dealing with this bundle of stocks, you have to pay attention to fees. Speaking of that active or passively managed ETF, the people who manage that ETF will charge you a fee to be able to have the exposure to the different sectors, or to be able to have the exposure that that ETF provides to the market, or to that particular area of the market that you want to be exposed to. So they will charge you fees for this. Now, we won't get into too much about how the fees are charged and different things like that. Just know that there is a fee, and most of the time it's an annual fee, but you just have to kind of pay attention to whichever ETF you decide to invest in. So now I want to get into a couple of these ETFs and show you what I mean when I talk about the ETF, the name of the ETF, what it actually covers, and some of the fees when you talk about these particular ETFs. Now, one of the first ETFs that I was exposed to, that I was told about and that I researched, was ticker symbol VOO. Now, this ETF is going to track the S&P 500 fund, the S&P 500 index. As you can see, the fees that I was talking about, the fees on this particular ETF is 0.03%. So it's pretty small when you talk about the fees that you have to pay in order to own this particular ETF compared to some of the other fees that we'll get into here in a minute. You can also see that it pays a dividend. These ETFs are, as long as the market is open, they trade exactly like a stock, or exactly like an individual stock. That's another one of the benefits of having these ETFs, is that you can trade it as easily as pushing a button, the same way you can do with an individual stock. You can get in and out of these ETFs and basically have exposure to a whole group, or a whole area, a whole sector of the market. So keep that in mind as well. These trade just like stocks. So the dividend that they pay here on VOO is 1.66%. So you'll still get that dividend, and you'll get that dividend quarterly as if this was an individual stock, but it's not. It's giving you exposure to all of the S&P 500 in this particular one. The next ETF is going to be ticker symbol QQQ. Now, if you take a look there, the fee on this ETF is going to be 0.20%. Of course, that's a lot higher than the VOO at 0.03%. But this ETF, it covers the NASDAQ 100, which is basically more tech companies. You're going to get a lot of your Apples and your Amazons, and a lot of the different tech companies are going to be on the NASDAQ or in the NASDAQ 100 index. And that's what QQQ is going to track. That's what this ETF tracks. So they offer a dividend of 0.55%. So it's a little bit less of a dividend that you would get with the VOO, and you have to keep that in mind as well. But you have exposure to a lot of the tech stocks, and with the tech stocks, as you know, if you've been tracking the NASDAQ at all, it has been skyrocketing because tech stocks have been running the NASDAQ up, which is basically the reason why the dividend percentage is a lot lower at this particular point, because you're getting a lot of capital gains when it comes to QQQ. So this next one is going to be one that I've kind of hinted at before. I've kind of told you about in some other videos. I did a dividends explained video, and you might want to check that video out. It'll give you a little bit of insight in regards to dividends and how they pay, and what to look for in a dividend stock. In this case, we're talking about dividend ETFs as well. So it'll give you a lot of insight. You all be sure and check out that video, Dividends Explained. But here, this is going to be ticker symbol NOBL. This is going to be Noble. It's basically the Dividend Aristocrats ETF. So this ETF is going to track the Dividend Aristocrats, which is basically companies that have raised their dividend for 25 years without cutting it, and they've raised it on an annual basis. These are going to be the companies that they have in this particular portfolio. So that being said, even when you talk about individual stocks and you want to pick individual stocks, you can go to this ETF just and use it as a reference, just to give you an idea of companies that have paid the dividend and have not cut their dividend as well. So, or you can just invest in this particular ETF that offers all of these particular stocks in one basket in this ETF. Now, this ETF, it has a fee of 0.35%. So it's going to be a little bit higher when you talk about the percentage wise on this ETF, or the fee on this ETF. It's a little bit higher. It also pays a dividend of 2.12%. So you're going to get a whole lot more dividend in regards to this particular ETF as well than you would with VOO or QQQ. So moving on to number 4, this is one of the more specialized. This is another one of the more specialized ETFs. This ticker symbol here is going to be VNQ. Now, in this case, this is one of my favorite ETFs. It's a real estate or a REIT ETF. This ETF here has a fee of 0.12%. So it's not as much of a fee. It's a little bit smaller, and you can kind of see the difference in all of these fees. But in this case, it pays a 3.80 or 3.8 dividend yield on this particular ETF. So when you talk about what this ETF tracks, VNQ is going to track REITs, or real estate investment trusts. So when you talk about real estate investment trusts, they have to pay out 90% of their income, or 90% of their profits in the form of dividends to their shareholders. So that being said, they're able to, in this particular ETF, to pay out a higher dividend because all of the stocks that they hold in this particular portfolio are REITs, which means if they hold those securities in the portfolio, in the ETF, they will get paid dividends as well, which means they can in turn give you a higher dividend because of the fact that you own their ETF and you're holding their ETF. So they're going to track real estate investment trusts. Now, getting into the last one here, this is one of my favorite ETFs. It's going to be SPHD. Now, this is going to be the S&P 500 High Dividend Low Volatility Index, or ETF. This ETF is going to have a 0.30% fee on it. And it's a pretty high fee on this particular ETF, but it also has a high dividend on it. And the dividend on this ETF is going to be 5.43%. So that being said, it has a higher fee that you have to pay, but it also has a much higher dividend that you're getting paid out, that's distributed to you. So SPHD, it actually tracks companies in the S&P 500 that have historically had low volatility. If the stock market goes up a whole lot, it goes up with it, but not as much. If the stock market goes down a whole lot, or the stock market crashes, it goes down as well, but it doesn't go down as much. These particular companies are more like consumer staples companies. Your Procter and Gamble's, your Colgate's, your all of those particular companies that have lower volatility are some of the companies that they have in their bundle of, or in their basket of stocks, or in their portfolio. So the best thing about this particular ETF, and there are ETFs like this that are out there, but the best thing about this particular ETF is that it is a monthly dividend payer. So instead of waiting every quarter or every 3 months in order to get a dividend, this is a ETF that I actually have this ETF in my M1 Finance portfolio, because it's one that it's low volatility, and it's one that I don't mind just kind of throwing money at passively. And that's the good thing about investing in ETFs. You don't have to really track each stock, or listen to each company's conference calls, or listen to or read each particular company that they have in this bundle of stocks. You don't have to read the 10Qs or 10Ks for each one of them. It's basically, they do the work for you, and in a way, that's why you kind of pay the fee. So I just put this one in my M1 Finance portfolio, and it's there so I can just deposit money in there, and it will automatically go ahead and buy more shares of this ETF. So it's more of a passive one, and not to mention the dividends that it pays me every month. I can roll it directly back into this ETF to try to build it and use the compounding effect to build it and build my gains and build my monthly income in regards to dividends and my monthly dividend income. So, y'all, I hope this helped you in regards to knowing what an ETF is and looking into some of these ETFs. Hopefully it'll make it a little bit easier for you going forward. Hopefully this helped you out. You all, please smash the like button. If you haven't subscribed already, please subscribe to the channel, especially if you like the content. If you want to see more videos like this in regards to educating you in the stock market, please do that. Also, hit the notification bell. It will let you know exactly when I put a video out, and you can check it out. So thank you all for coming in, and I will see you all on the next video. Thank you very much. Bye-bye.